If
Yeah.
somebody want to buy property, they should buy right now, because in the future, is whatever the price is gonna go low, it's already gone down a lot. They will know, as per my instance, in my personal opinion, it will not go lower than this, whatever we have right now.
Okay.
Because there was a time the prices were 1.4, average houses 1.3, 1.4, but those houses are selling now under 1 million.
Yeah.
I don't think so it's gonna go down then more than this.
Welcome, everybody, to the Ultimate Real Estate Lifestyle Podcast. Today, my guest is Gurdip Kaloti, also known as Gary. And Gary immigrated to Canada back in 2001 and founded Anchor Mortgages in Abbotsford, British Columbia in 2021. And Gary's organization focuses on residential, commercial, construction, and private lending. And so, with a mix of immigration and entrepreneurship and pretty in the weeds of a lot of things real estate, today's episode is going to focus on real talks about money, deals, risk, and how Gary helps people avoid risk and also how to structure some deals to get some wins. Gary, welcome. Thank you very much for coming.
Thank you.
So everybody loves the origin story, Gary. So we don't have a history, you and I. We just met through the grapevine of being introduced in the lending world. So what is your origin story? Let's talk about the personal journey for you, kind of pre-immigration, post-immigration, and sort of your journey that led up to you founding your company.
I came to Canada, as you mentioned, 2001 as a immigrant. So I was trying to go to the college at that time, but somehow because couldn't go, and I started working as a truck driver. I got class one license and I started driving truck. I drove for 5 years, I think. Then then I thought, no, this is not my type because I have a background from computer engineering. So I thought, no, I have to go find something else. But I tried to go back to the college, but couldn't go again. Then I started driving bus in local here in Abbotsford and Mission, Chilliwack, and I drove for 10 years. And then I still, as I said, driving was not my profession, and I was trying to get out from there. And I started a couple of other business as well. I bought restaurants, and that didn't work out. Then I thought, no, I should do this course, mortgage, so then I can still work from my office and still in touch with my computers, and I can do all the software thing as well.
Yeah, right.
Did my course and start working from home first. Then in 2021, we started our own brokerage, and I had another partner as well with me.
That's amazing, man. And so how old were you when you immigrated? Because you said you had computer engineering background, which is a very common theme that it seems with immigrants that are coming in. They've got this strong educational background that is, either non-transferable or very difficult to sort of get back into that space. But how old were you when that happened?
Even when I came to Canada, I think
Yeah.
I was
Yeah.
around 25, 26 year old, 20, 24 probably.
Okay.
Now
And
that
and what were some of the challenges with doing the college route?
because I have some responsibilities to make some money as well, and they want to go to the
Right.
full time to the college for instead of 4 years, they were giving me 1 year exception. Then I had to go to 3 years in the college, and that was not possible for me at that time.
No kidding. Well, and that's a struggle that everybody faces, and it's a kind of a common theme. It's how do you, even in with my clients on either spending more time investing into real estate or transitioning into it becoming full time. It's kind of the same thing. It's like we have a responsibility to still pay the bills. We
Yeah.
still have to provide for our families. We still have to continue working, but how do we continue to grow and educate ourselves to get out of it? It sounds like you've gone through quite the journey. You mentioned some restaurants and stuff in there too. What kind of businesses were you involved in leading
I
up
bought,
to?
yeah, sorry, I bought a restaurant in 2008. And that was a Greek restaurant, and that was in Port Kells area in Langley.
Yeah.
So I bought in partnership and I ran that for 2 years. And if you remember in 2008 or 2010, the recession was there, came. There was a recession.
Yeah, just a
And
little one, just a little one,
yeah,
right?
that was the one, yeah. But that was big hit for us. And we tried to run it, but was struggling and did it for 2 years. Then after 2 years, we have to sell it.
No kidding.
Yeah.
No kidding, man. And that's also unfortunately a common story of people who went through that, in the business era or investing era. There was a lot of people got wiped out. A lot of things happened that nobody saw coming, and it's a big part of why we're having discussions today because I'm getting asked all the time on what the right direction is and what people should be investing their money into or what's the right path.
Yeah.
And we're in an interesting time here because we all know that we've kind of ridden up this nice last 10 years, like since the '08, '10 sort of recovery. We've been
Yes.
riding this very, very nice ride all the way back up, and it kind of feels a little bit like, a little bit of deja vu where we could be heading back into some tough times. Things are a little tighter. What are the risks associated with that? So, I'm glad you got experience in that time frame because I do, as we dive into this a little more, I want to maybe ask you some of the questions that about related to that, about some of the similarities you're seeing and what
Mhm.
what kind of projection you have. So that's awesome, man. Well, and what was the exact moment that you decided that mortgage lending was your lane?
Because as I said, the driving profession that was not my type. So actually, when I was in my home country, I hate driving at that time. And then when I got here, so there was no other option. I had to drive a truck, especially. So yeah, then I was trying to get out from that profession. Doesn't matter what I'm doing, I just want to get out from there. So I thought talked to a couple of my friends as well. Then we thought, no, go for realtor or a mortgage broker.
Right.
That we can do part time. The starting in the beginning we can do part
Yeah.
time, the real estate or mortgage brokering, and so we
Right.
don't have to quit our job right away. So that's what we're planning. And then I thought the mortgage brokers, I can still do my job and do this part time. And yeah, that's how it started. So I did
Right
course
on.
part time, then finished it, then
So,
start
and
this.
how long did it take you? What was that time frame between when you made that initial decision to founding your own company?
Actually, I did mortgage brokering for part time for 2 years.
Okay.
Almost, yeah, 2 years. I did for 2 years. Then after 2 years, I thought, no, I can quit my job now. I'm making enough money on this side, so I can quit my job. So I quit the job, and then I started working full time as a mortgage broker. Then I was working for other brokerages, which is Craft Mortgages, well known, and I learned a lot from them. Then I thought I should start my own. Then I was looking for partners. I found partners. Then I started in 2021 my own brokerage.
Awesome, man.
And
And,
we
and you said
were
you
sorry to interrupt. We
that,
were the
that
nominator in the beginning for I think first or second year for the fast growing brokerage in BC.
fantastic, man. Congratulations on that. That speaks volumes in an industry that has a lot of players in it. There's a lot of people in the mortgage industry. So good on you for having that standout. You mentioned you have partners in your business as well.
Yes, I do have partners
And is that family, friends, or were they people that you met along the way in your mortgage journey?
in the mortgage field. I didn't know them before. No.
Okay, awesome. And do you have family? You have family here in Canada that came with you?
No, I got married in 2016.
Okay,
Sorry, sorry, 2015. I hope my wife is not listen this. Okay, so I got married in 2015. Then I have two sons. One born in 2016. Another one is 2022, I think.
fantastic. Okay, so you've got one a little more mature, and you got a younger one as well.
Yeah, I have a 4 years and 10 years almost.
Yeah, right on, man. And what did success for you like? What happened at home, and how did that change your family dynamic and your sort of stability in general as an entrepreneur when you started finding success in your business?
I st- uh, before when I was doing job like a bus driver or whatever, I never had a weekend off.
Yeah.
I work all weekend, most of the overtime and everything to survive. But when I started my this business and the first beginning couple of years, then I think after 3 4 years, I stopped working on the weekend. Those weekend I spend with my family.
Right.
So that was the biggest thing for me to spend time with my family. And
No kidding.
yeah, that's where the success starts.
Yeah, that's awesome, man. Well, I love hearing that because it's I have four kids as well, and I've been involved in a lot of businesses and a lot of stuff, and for the most part, when you boil it down, there's only so much business that's worth it, and working and grinding for the rest of our life is not what any of us have in mind, and it's a big part of why I do what I do on the coaching side of business. I invest in commercial, residential real estate myself and multifamily buildings, but I'm also helping others do the same thing because there's only so much you can do trading your time for money, and that's
Yeah.
going to keep you in that trap for the rest of eternity until you get to one day realizing that, oh crap, I don't have anything that replaces that or gets my money working for me. And I'm very biased on real estate, and you're obviously very entrenched in it, so I know that you see the value of real estate as well, and it's why you're invested. But that's really awesome. It's good to hear that you found something that gives you more freedom, more time, flexibility with your family, and obviously these are the years that you want to be getting, making sure that you're keeping that time and not losing it. So good on you for that. So what do you do when when I talk about clients and coaching, and when I'm working with everybody, we're always talking about how do you find the success that we're looking for? How do you work towards the end goal, which is different for everybody, but do it in a way where you still have that value. That's still like the personal value and the personal growth, and making sure that you're feeling like you're growing. So what do you do? Last question on the personal side, but just from a personal standpoint that most people wouldn't really know or guess. What do you do in the background to keep yourself personally growing and sort of your mindset in the right place?
If I quite understand your question, personally growing, as I mentioned, for I kind of more freedom, more time for my family, and those 5 days I work. Well, if I need 10 hours, 12 hours, I work straightforward. But those 2 days, I don't. If I have to, yeah, I do take some time.
Of
If you
course.
need to meet the client, if it's emergency, I have to meet the client. That definitely I use that. But most of the time, I just 5 days a week, 2 days off, and I focus on my client's success all the time.
Yeah,
Always, client is my priority. So I don't work. I mentioned in my advertisement as well. I don't work for the banks. I work for my clients.
gotcha.
So that's, yeah, I have hundreds clients, the happiest clients, satisfied one. Yeah, that's my success.
That's awesome, man. Well, that's good. So what I'm picking up out of that is you protect your time, you protect your personal time. It's very important. It's sacred to you, and you don't blur the lines. Unless, of course, business owners, we always need it. You can't say that you don't work 24/7 because when you're pleasing clients and growing our businesses, there's always that aspect to always
Uh,
on. But having a line in the sand of knowing that weekend time is protected is something that a lot of us lose track of, right? And we all have
yeah,
over time. But you've obviously gone through a great deal in your life of spending your time, working weekends, 7 days a week, paying the bills, trying to keep that money coming in. We all know what that feels like at one point or another. So that's awesome, man. So on the business side of it, so Anchor Mortgages, as we mentioned in the beginning, you do residential, commercial, construction, and private lending, which pretty much touches all aspects
all
of the
that's
lending world in a lot of different ways. How does Anchor Mortgages really make their money? Like what is the core volume of your revenue that you focus on? Either whether is it volume? Is it specific niches that you work in? Is it referrals that get most of your business, like repeat clients, that kind of thing? I'm just wondering it's just from a business perspective of what you really focus on, what you see as your sort of main core of your business.
as I just mentioned before. My if my client is satisfied, that's where my success starts. So
Okay.
I get most my business from the repeated client or referral from the client and my other sources like realtors, lawyers, and accountants. So those are my referral sources as well. But I would say the main focus is on the client. If I make one client happy, he give me 10 referrals.
Got it. Got it.
And
So it sounds like referrals and repeat clients is a big part of
repeat
your
client,
business,
yes, yes,
which again speaks volumes for how you're treating your people and the results that you're getting, especially in a short amount of time. I mean, we're only talking 5 years ago that you founded your business, which, in most cases is a fairly fresh company. And so
yes,
it's
it
good.
is.
It's good to see that that's a big focus. It's what people want to hear. What was the hardest part about launching your business?
In the beginning, yeah, I was planning this for in 2019 or 2020, but it was hard for me to do by myself because there was lots of other stuff. I need somebody who can stand beside me and work together. So I was looking for a partnership, and I did met a couple of people before in 2019, didn't work out, and 2020 didn't work out. Then finally, I got nice partner. Then we decided, okay, let's do this. We have a 4 or 5 meeting. Then we said, we were thinking, yeah, we're on the same boat. We can go together. We can get along with each other. Yeah. Then after 2 years, we started in 2021. Finally, yeah, okay, let's
Okay.
do this.
Well, you're kind of hitting on a subject that I wind up talking about a lot. So that's where your journey was. You knew what you wanted and you knew where you were trying to go, which was getting out of the place that you were in to run a business that got you the freedom and flexibility that you were looking for and doing what you love doing.
Exactly.
The journey there is really the core aspect of my coaching business. It's identifying where you're at, where you're trying to go, but what is the plan that's going to help you get there? Then implementing the plan and helping you get there. Partnerships is a big aspect of the real estate industry because it's an overwhelming industry. There's a lot of moving parts. There's the lending, the financing, there's the operations, there's the numbers, there's the management of it, there's the execution, there's the data control, and there's, in construction, there's obviously that
Yeah,
aspect of it. And a lot of people get trapped thinking that they have to do it on their own, and they start off thinking that they're going to do this all on their own, which it sounds like you spent a couple years, figuring it out like we all do. And then once you hit sort of a ceiling, you realize, man, I'm not going to be able to do this the way that I want to, or I'm going to be right back into working 7 days a week. And that's not really what I'm doing this for, right? So
exactly.
you probably did it, it sounds like you did it for two reasons. One was because you needed the experience and people that could actually come on board to really help support your business to make sure you're delivering a good service, but also to take a burden of that time away. Am I hearing that correct?
Yes, definitely.
If you could rewind the clock on that time, on that sort of that gap, that bridge, what would you have done differently to sort of get to that conclusion faster, knowing what you know now? What would you have done differently in the journey of starting your own business?
That's a good question. Differently, actually, I'm doing whatever I can right now. Differently, I could have done I'm just trying to think what I can do differently because whatever I can, I'm just putting my 100% uh,
Well, and
all in.
let me ask you in a different way. It took you a certain amount of time and energy and that all in to get to where you're at. What are if you could collapse time, if you had to do it all over again and get to the result quicker of getting your business to where it is now, what are one or two of the things that you know now that you would have done differently then? Like, would you have looked for partners at a sooner date? Would you have looked for sources of people that maybe had gone through that journey together, or did you do everything the way that you thought you would do it again, which is just go and figure it out?
Um, the partnership, yeah, definitely I could have find a partner before to start a little earlier. And the other thing I could have done, like I was focusing at that time, even from the beginning, focusing on residential and B-side lending thingy. I couldn't focus much on the commercial side or construction side at that time, which I'm focusing now. And that's what I could have done differently. I could have focused on commercial before and
Right.
then build my business on the commercial side better.
Okay.
Because why I'm saying it, because these days it's hard to compete with the banks.
Yeah.
So whatever the banks are offering, sometimes it's getting hard for us to match that as an independent mortgage broker. And but on the
Okay.
commercial side or private side, we are the best, and we can do way better than whatever the bank's doing inside.
Okay, so that's a big one. I mean, that ties directly into a lot of the things that I'm dealing with. I'm either dealing with clients that are already in the commercial real estate space and they're looking to grow and expand that, or
Yeah.
a large part of it is people that are actually looking to get out of the residential space and into the commercial space. And it's always I say the same thing that you just did, which is you can spend time in residential and you can do that, but you're
Yes.
limited to what you can achieve and you're limited to the growth and the time it's going to take you can all be expedited and your growth could be exponential in the commercial side. And the sooner you take that jump, the quicker. So it's interesting to hear you say that even on the lending side, that it sounds like, one thing differently could have been focusing on the commercial side, which maybe would have got you to the scale and the liquidity a little bit faster and dealing with things at the bank. You're not sort of grinding that wheel of low margin stuff.
And then on the residential side, it's hard to compete with the banks, but on the commercial side, it's hard for them to compete the mortgage brokers.
Not the space you want to be in, right? Make other people be chasing you for the business.
Yes.
Well, and sort of okay. So speaking on that, so it's a good topic because we're trying to deliver value to everybody that's listening to this, and people are facing challenges today. Like it's a real thing.
Yes, sir.
Lending is getting tighter. The cost of things is getting higher. The access to capital is getting less and less every day. And qualifying for residential mortgages is one of the main reasons that I switched into multifamily 10 years ago, and that was 10 years ago. I mean, even when I was doing it, it was tough because they were limiting the amount that you could borrow back then as a personal borrower or in residential financing. Now it's gotten almost unattainable, except for, as far as investment properties, they've almost made it impossible to buy investment properties. And the private, the principal residence is kind of the only thing that's sort of the low hanging fruit right now. What do you see? What do you see the biggest struggles are with people that are still in the residential space from an investor standpoint in your business? What are some of the major challenges that people are facing that you see
Yes,
on both
investors.
sides, both the borrower and the lending side?
So borrowers, they're because this market is very tough market for everybody right now, even for the lenders and for the borrower as well. But borrower, there's so much confusion in the borrower. The borrower, there's lots of borrower right now, and lots of buyer there, but they're confused what to do because market is like some people are thinking, okay, the interest is going low, then market will go up, and some people say no, it's a buyer market, buy right now. So buyer is so confused right now. If
Yeah,
they want to get into there to buy a house, but they are just holding on it. Okay, let's see what's going to happen next. Let's see what
right.
the Bank of Canada did in February, January or February. They didn't change anything. Okay, in March, let's see what's going to happen in March. So it's so much challenging for them. But even as per my understanding, this is the buyer market.
Right.
If
Yeah.
somebody want to buy property, they should buy right now because in the future, it's whatever the price is going to go low, it's already gone down a lot. They will know, as per my understanding, my personal opinion, it will not go lower than this, whatever we have right now.
Okay.
Because there was a time the prices were 1.4, average houses 1.3, 1.4, but those houses are selling now under 1 million.
Yeah.
I don't think so. It's going to go down then more than this. I don't think so.
Yeah. That's a
So this
pretty
is the
massive
buyer
drop. You're
market.
talking a 20 to 40% drop in those average prices.
It's already gone down a lot. Yeah.
Yeah. Yeah, it's crazy. And so so you say that on the residential side. What's happening? Is that also being mirrored on the commercial side? Is everybody kind of on the fence right now, or
No,
are there more stuff?
commercial is totally different than the residential side.
Yeah, okay. Yeah,
Commercial is always, I would say commercial is always booming. So it's not like it's gonna go down. They can stay steady or a little higher, but commercial is always steady. It's not like residential. As per my understanding, it's not like residential. It's go boom, then down, then up and down. It is like commercial side. It's not like that. It's totally different.
And
It's a
so
steady.
And what do you, how about the construction side of things right now? Because from in my world, like we did a lot of land development or bought a lot of land in the last few years. A lot of things either got killed or stalled out. A lot of developments didn't pencil, things got shelved. A lot of developers, lost liquidity. There's sort of foreclosures and bankruptcies everywhere. But what are you seeing as far as the active side of construction and development right now? I know it's steady and that's sort of, there's always going to be a baseline amount of business that's
Yes.
going on, but what's happening? What do you see happening in the construction and development side right now?
That has to be hold for now, I guess, because for the construction, multifamily construction or the development side, it's not a good idea to go into right there right now. It's
Right,
so if somebody can hold it, they should hold it for next at least 6 months to 1 year.
right.
So maybe after that it can go up or they can work on it. But right now, it's not a good market to get in.
No, no, definitely not. And it was it's a big pivot. It's a big advice for me and what I do in my business is we buy income generating assets for that reason. They're
Yes,
already existing. They don't require approvals. They make money right now, and then they have a value add component. We target distressed
exactly,
properties or sellers that have a value add component because as you're doing that work, you're increasing the value. But the worst case scenario is you've still got an asset that pumps out income every day, and as long as that covers the debt, then you can weather these storms of up and down. Whereas development's not exactly like that. You're in this up and down cycle, and if you're lucky enough to catch it or in a good position to catch it on the upside, fantastic. But when you hit that downside, it can be a game changer. It could wipe a lot of people out, right?
exactly. Because on the residential side, still you can survive, but on the commercial side, if you go down, it's a big hit.
It's a big hit. And for those who are watching that don't know, residential is based on your income. So if I come to you for a mortgage and I do a mortgage application, I got to show you my personal finances and my personal income in order to qualify for the mortgage. But on the commercial side, that's not how it works. And you're lending now on the asset
That's it.
in instead of the person. Now, of course, the person still has to have checks and boxes and have the experience, and that they have to bring the money to the table, either with them or their partners. But for the most part, it's based on what the performance of that specific asset is. So there's not really any limitations as far as lending, as long as you can make the numbers work in the deal and bring the right amount of capital to the table. Is that the way that you see it as well?
Yes, definitely. Because on the commercial side, it's not a based on the person. Because on the commercial side, it's a separate entity. Like they're not lending to the person; they're lending on the assets. Whatever they're buying for, it's a running business or it's a building or it's a development land, whatever it is. So they have to. They need to see how they're gonna generate the revenue from there. So
That's
it's all
right.
depends on there. So yeah, it's not on personal.
And so what do you see? I'm an advocate for commercial multifamily. If you couldn't tell already, we've discussed that, of course.
Yes,
Where do you see the biggest challenges? This is the two-part question. And like I said before, some people are in it and looking to scale, and other people are looking to get into it, out of residential and into it. So part number one of the question is, what are some of the biggest challenges that you see in for people that are trying to transition from residential real estate investing into commercial multifamily investing?
these days.
Yeah, just in general, based on your experience in general.
These days, if somebody has a house and they want to buy a uh, kind of development land or the duplex or fourplex or other commercial stuff, it's easy to get the mortgage there. It's easy to get in there right now because the price is not that different. I mean, you can sell your house, you can buy a. I would always prefer that buy a property like mixed use like these days the mixed use the bottom part is the commercial and upper is the residential and it's easier to get the mortgage and easier to get the income producing you can yeah it's better to do that.
And so what, but and more to the question of the challenge that people face, because there to people, and maybe it's more of a mental barrier, right? Of transitioning. And when I say commercial real estate, like, and I'm not, yes, I'm talking development, and or like commercial falls under development and stuff like that, or development falls under commercial. But when I'm talking commercial residential, I'm talking 6 units and up, and the apartment buildings either in 25 units or higher, 250 units. It doesn't matter. But when somebody's stuck in renovating houses for, like, that's what they're used to. They get a mortgage, they renovate, they either sell or they refinance, and that's their business. But scaling, getting into the multifamily, like, do you have clients that you have actually seen go from residential investing over to commercial multifamily investing? Have you been a part of that journey for some people?
No, not yet. As I said, from last year and a half, I'm focusing on the commercial side.
Okay.
But I do have a commercial client, but I didn't get come through from somebody from residential to commercial. And didn't have any client like that
Okay,
yet.
gotcha. Okay, then so then the second part to that question was on the commercial side. So what are some of the, for people that are already in the commercial game that are looking to scale, and I assume you probably had some relationships with clients where they've scaled up and they've grown portfolio and advanced in that category. Is that safe to assume? What are some of the challenges? So then the question is focused on, what are some of the challenges that you see in people that are looking to scale?
'Cause I do have a clients, those they don't want to do anything on the commercial side. Even they have whatever, as I said mentioned before, whatever they have right now, they're trying to hold on it, or they're just trying to sell it and not to do anything else right now. Because some of the clients I have, they have a multifamily development land and the hotel and the other things, and they don't want to expand more. They don't want to spend the money there anymore. They just want to keep hold on it if they can, as per the market these days, or
Yeah,
they want to sell it as soon as possible.
gotcha.
Because it's not a good market to develop or spend more money or invest more money in this field.
Of
This is the
course.
time to just hold on it, whatever you
Yeah.
can. So that's
Weather,
what my
more
suggestion.
more weather the storm. So maybe the biggest challenge that you're seeing with people looking to scale right now at this particular stage is just the market in
Yes.
general. Okay. Okay, so your filter from an investor perspective, because when we initially spoke, you invest into real estate yourself, correct?
Yes. Yes.
What do you invest in? Do you invest in, are you a residential investor or commercial investor or both?
Residential right now.
You're residential right now. Okay.
Looking for commercial, but not right now. But I did investment for an residential only.
Okay. So you've got some rental properties.
Yes.
Fantastic. So your filter, I have to ask the question, have you ever thought of going into commercial multifamily, like switching, like transitioning into commercial real estate space?
That- That's my future plan is, yeah, definitely
Okay.
yes.
So then these questions, maybe instead of directing them at your clients, do you mind if I direct them at you?
Yeah, definitely, yes.
Perfect. So you're in the residential space. What is your challenge with growing in the residential space right now? If you wanted to continue growing your portfolio, what are some of the limitations that you're facing as a residential investor?
At this moment, I would say the market only.
Okay,
Yeah, the market did that only the situation, only the market is stopping me to go there.
right.
Because whatever I have, I want to just hold on it. I
Yeah,
don't want to invest anything right now because the market, you don't know where the market is gonna go.
yeah,
It's
fair
hard to
enough.
protect these days. Yeah.
And so what going into, with your interest in going into commercial multifamily, what is what would be your next move? Like, if you were to make that decision, or what's stopping you from going into commercial residential, and what would be your next move when you make that decision? And this is just very, very curiosity standpoint, because there's a lot of people in your position that are in residential, want to go to multifamily, maybe don't have a good idea of what the next steps are. And so I'm really trying to get inside the brain of Gary here and just think through the process. Like, if you were going to make that decision now, what would that look like for you?
The same thing, as I said, this is not the right time for me to go into that market. But yeah, definitely in future, but don't know when. But definitely in future, I will go with the multifamilies. I will start with the multifamilies, definitely in partnership, and the development land as well.
and development.
Yeah, I do have. Sorry, I do have already my friends. They already have some project going on the what you call Okanagan Valley. But that's the only reason we just wanna pause on it. That just wait for the market. Let's see where the market goes. Then we can start working on it. Like
Yeah. Well, that makes perfect sense. And when I'm talking, so when I'm talking commercial multifamily, I just want to be clear. I'm not talking about development. Like there's a development component of going out and building those buildings. That's one thing. And I would agree with you. That is cyclical. Like that requires you to be in a place where the margins are there, your downside's protected, the market is growing, that you've got locked in rates and not a lot of volatility. However, on the acquisition side of existing deals,
yeah,
those as long as they've got you've got the right DCR, you've got the right rent, and potentially some value add components. Those to me, through my eyes, aren't risky as long as they're able to service the debt and service the cost to get you the returns based on the revenue that it's generating. And that's more what I work on for sure on that side of it. Do you still see? But it's interesting for you to say that because there's a lot of people on the fence. No matter what, like nobody wants to make a move no matter what happens. They just want to see where the chips are going to fall and what's going to happen to the rates and what's going to happen. But I also know through experience that, up, down, or sideways, if you're buying an asset that generates income that services the debt that you have locked in to weather any storm, I don't see a lot of risk in that. But do you still see what are the things that are holding you back in the market from that perspective on multifamily?
no, you are right there. If you have the DSR and the cap rate is good, yeah, you can go for it.
Okay.
Yeah,
So
definitely.
we're looking through the same lens on that then because I don't we are blurring development in there and I completely agree with you. It's
Yeah,
why like we have land and we have permits on properties and we haven't developed a single thing in the last few years. We never even proceeded with any of the projects because nothing makes sense. Everything's
nothing.
upside down. The protection's not there. Costs are uncertain. Interest rates are uncertain. There's no way to predict that stuff. And
That's what I'm
so
saying. Sorry, if that's what I'm saying. If the cap rate is good
yeah,
and the DSR in line, and you can see the market is good, and the rent it's already rented out or it's already been long-term leases are done. Yeah, the cash flow is coming, and yeah, definitely you can go for it. But to the other side, this is if you're new for this is a new thing for you, the new investment and you have already invested in a residential for like me, and you have to hold on, you have to what you call make hold on that too, right? Make the payments, and you need
that's
some backup for that as well.
big
So
time.
if whatever you have in your saving or in your investment funds, I don't. For personally, I wouldn't go there right now, even if it's DSR good or the cap rate is good, the cash flow is coming. But whatever you have in your hand, I don't want to spend that on the other side. Then, if you look at the back, and then things are falling down and parting. Yeah.
So
So
you're
better.
you're ta- you're talking about leveraging or like getting the equity or your investment capital from your existing assets and using those to invest, correct?
No, I mean whatever you have in hand right now.
Yeah,
For example, for example, if I have to invest the money into the commercial side, and I have a $500,000 or $1 million sitting in my bank, and I want to spend it there, but I have already 10 properties, residential side, but the rental market is not good these days, and something you need to have backup for that as well.
be able
Whatever
to service that,
whatever you have in hand already.
of
So
course.
when you think, okay, this you're good and you can go for the new things, yeah, definitely you should go. But right now, just think twice before you invest.
I couldn't agree with you more. And yes, you're being able to service your existing stuff is a critical
Yes,
part. And yes, and I mean that goes back to the risk of residential, where the value of that asset fluctuates depending on the market. It has
exactly.
nothing to do with how much money it makes. It's just worth
Yes,
what it's worth. But when that tenant stops paying in a residential house, you're 100% responsible for that mortgage. And if you don't
yes,
have your bases covered and cash reserves to be able to service that, that's where a lot of people get in trouble, of course, on the residential and commercial side. But in residential, you have one tenant, they don't pay, you're paying.
exactly.
Either you're paying it or you're getting a letter from the bank. So interesting, because it's an awesome perspective for me to see in your shoes and looking at both sides of the fence and being on that side. And if you forgetting the market for a second and forgetting the decision to invest, let's just say that you made the decision to invest again. And I don't, whether it's residential or commercial, I'll leave that up to you to differentiate if there is one. But what filters a good deal? What kind of returns on a spreadsheet, or what kind of things are you looking for personally when you're making a decision of investing your money? Is it cash on cash return? Is it upside or long term appreciation? Those kinds of things. What do you look for before making a decision of investing your money?
Not on the long term side, but I would say I'll go for a upside one. So where I can get the return um, soon,
So you're
not
talking about the
for,
value add component.
yes.
Okay. Yeah, upside
So
value add. Yep.
upside value added, and you can make more. You can take the equity from that and invest somewhere else if it's a upside one. But if
Yep.
it's long term, you never know what's going to happen in long term. So my type is short term kind of thing. So go for a upside one, take out and go to the next
Okay.
one, and
So you'd be looking for the value add component, right?
correct.
And of course, getting, and that's where most of my experience comes from. I agree with you 100%. You want to look for hidden value, unlocked value, where you can go in and you can collapse time by doing the work to expedite the value appreciation and then refinance that, be able to take that money out and then go reinvest it again.
Or
Do
sell
you,
it and go to the next one. Yeah, whatever. At
yeah,
least
and
you can make some more money on it, will get at least 10 to 20% return on it and invest to the
that
next one.
absolutely. And so you kind of said a number there that sort of answered my next question. If you were going to get into a value add development or a value add project, I was going to ask you what your return criteria would be as an investor. And is that what you just said was kind of like 10 to 20%? And we're
Correct.
talking annual return. If there was something
Good.
that was a 10 to 20% annual return on your money for a value add project, that would sort of start to check the boxes for you in an investment.
Yes, yes,
Okay.
yes.
Does I teach people in coaching all of the time, or my clients, my coaching clients, I teach them the number one thing is to understand how money works in the deal. And it's surprising. I guess it's not surprising because I've been in it a long time. You're in the numbers game. To us, when we read spreadsheets, it's like drinking coffee. We see it right away. We understand it. What are the costs? What are the projections? What are the cap rates? And then it spits out the return based on the money invested, and it gives us that magical number of the projected annual return, right? Which is kind of what we're
Yeah.
talking about with that 10 to 20. But I teach people as well strategically how the terms of the deal can really change the return on the investment, because it's dependent on how much money you put in. So, and if you have less money in the deal, then the returns on the money tend to go up, i.e., creative financing or higher leverage, right? Less actual cash in the deal, extended closings, those kinds of things. And what that usually does is it starts to change the returns to be 20+%. And some of the deals that we do on return on the investment, one of the deals I'm working on right now, it's showing like a 20% cash on cash return, and it's looking at like an equity multiplier of about 100% in a 2-year period. Now, internally, we guys like us that are in the operational side, we know why that happens, and it's easy for us to identify and look at the details. Like, is this real? What are the factors that are making this real? And then we know, if we do our due diligence, we know right away, this is a good deal. Like, this is a viable deal with real numbers. But on the other side of it, if you don't know how the money works, if you don't really know how to really dig into it and do the due diligence, sometimes or a lot of times those numbers look fake. They look like they don't look real. They look unreal. They look like how can everybody else be talking about 10 or 15% return and then you're looking at deals that are, 20, 50, 100+% return. What are what are how would you look at a deal? Like what's your perception if you're somebody else that doesn't have our background, doesn't have your background, doesn't have my background, but they're looking at these opportunities. An accredited investor, let's just say, that wants to go put $500,000 into a deal, and they see a deal cross their plate that shows these outside returns for a value add project, let's just say, and they look at it and they're like, okay, either this is a really good opportunity or this is a scam, and they're both like you and I know damn well you can make a spreadsheet say whatever you want it to say, but
Yes.
executing it is a totally different thing. But whether it's a scam or it's not a scam, just put yourself in the seat of the person that would receive that information. What would you do if you were that person, that wants to invest that money, that wants to get into a project that does have a better return than the average and look at a value add opportunity or any opportunity for that matter? What would be the first steps that you would do to go to do the work to find out if it's real, knowing that you don't have the education or the experience to do it yourself? What would you do right away for someone? Or if you were someone, what would you do?
For my first step, will be like do some homework, like do some research on it, see the market. If it says that 30, 40% ROI on it, then do some research on it. It doesn't matter if I have a background, nothing. I mean, don't know nothing about the real estate or anything, but do some research on it. There's lots of resources out there these days. Do some research and see the market where the market was 3, 4 years before, or what the circle, because market always goes like this.
Yeah,
It's
okay.
always
Yeah.
cycle. It's going like up and down. See the
Yeah, so you
cycle
don't
of
you don't just want to look at the last 6 months, you want a bigger
no,
snapshot of time.
exactly. See the cycle where the market was up, when the market was down, and see the cycle and where we are right now, and see do we get that much return on it? Do some research on it. That's all. Yeah.
Okay, and when you're talking research, try and boil that down through your eyes. What are the three things, just to simplify, because someone gets a spreadsheet, there's a million different things that they can go. But what would be the three things that you would recommend them digging into right off the bat, just to see if it's a pass or a fail, if it passes the sniff test or not? What are the three things that you would recommend drilling into and doing your own research on before you bring it to a professional?
So if it's a cash flow investment, then you need to see the rental market kind of vacancy rate. What's the vacancy rate in there? So how is, I mean, how is the market in that area particular? And if it's not a cash flow property, then it's just
A value add?
value added. Then you have to, as I said, you have to see the cycle on the way back there and see what's going on.
Okay, yeah. So obviously checking the rents of the area and just getting an understanding of the projected rents or the rents that are in the spreadsheet, which is basically the revenue, right? You want to look at the aspects that are supporting the gross revenue, which is
Yeah.
usually rents, right? That's what it comes down to. The vacancy rates. So you want to make
Yeah.
sure that the proper vacancies are taken into consideration, and then historical trends in the area, right?
Always match whatever the document says and whatever the market says. Just compare those. If it see if it's makes sense, yeah, whatever they're saying is 40% return, and the market says this. If it's a little bit different, like here and there, 1 or 2, 3% difference, that's manageable. But if it's a huge difference, then you need to make your mind.
Yeah, and I get what you're saying as far as appreciation. You're talking appreciation of assets in the area, right?
Yes, appreciation, and the other side is the cash flow and the vacancy rate. Yeah,
Right.
both sides. Yeah,
Yeah, and and I get what you're saying on the appreciation side, but when you're looking at a true value add, you could be getting a building that has no revenue and you
yeah.
could be doing millions of dollars of work and then you could be increasing the value of that by 100 or 200%. So I guess more which obviously is a massive lift. And I'm just throwing out general numbers, but I guess what you're saying is more more about proving what that end valuation is. Like, I guess the market trends that you would be looking at then would just be what is the approximate value of assets once they're renovated in that sort of in that range. And you don't want to be way too optimistic or way too conservative. You're just looking at what is everything else valued approximately for when you're done, correct?
Yeah, that we were talking about the fresh guy who doesn't know anything with the real estate and just getting into there. He doesn't know. He has some plans going back there, but he
Yeah,
has to implement those plans and he doesn't know where to go, where that plan's gonna take him to. So so that's a fresh guy. If it's an experienced guy, he knows if this is shit, I
yeah,
know I can work on it, I can make a million out of it. He knows his stuff. But
yeah,
as a new guy, he has some plan, but he has to implement. So you need to research all those things first.
yeah, yeah. Good call. And a lot of people invest their money without doing their own due diligence, and they hope they can trust the person that's talking to them, and that's the easy way of going about it, and you're just gambling on that. But a lot of people don't take the time to do that basic research and to just look at a couple of the obvious factors that are easily accessible on the internet now that can really just give you an indication of, is someone being honest and transparent with their projections, and are they living in reality versus you check a couple of boxes and they're way out to lunch to begin with. Well, you don't even really need to do any more research because
Exactly.
the rest of the information is probably going to be the same.
Yeah.
Okay, so what are some of the things that you're seeing? If you're sitting back, it sounds like you see a lot of people sitting back. You seem like you're kind of on the in the same boat as far as just taking a breath on the market. What does the next year look like for you as an investor, as well as your business? What do you see on the horizon over the next 1 to 2 years?
As an investor, whatever I'm uh, looking right now, I mean, these days, so many news going on that people are investing in states right now,
Yeah.
US. There are a lot of people that investing in states. So that's what my focus as well right now.
Okay. Is that for your business as well, or just the investing side?
Just investing side, yeah.
Okay. So so you're seeing a lot of people go and invest into the United States, and it seems like a trend that you're following. You're just taking a look at things. So you've obviously considered that, and you're willing and able to go invest outside of this country right now.
That's what I'm thinking. I'm in the process. I'm talking to the people who are investing there already, so I'm just in the process there right now. So, but in Canada these days, everybody's saying just hold on it.
Yeah.
So this is not a because there is lots of going in the politics side as well, and you don't know who's gonna come next and who's staying and what's gonna happen in the politics area. So it's all depends. The market, as per today's news, market is not good for, not in favor of Canada.
No, it's not. And we also talked about that before we got on here on our last call, our first call, which was they're doing a lot of things to push a lot of people away. The investment is tough here. The politics are uncertain. The macroeconomics are that the big companies, the big organizations, the big infrastructure supporters, they're not putting money here either. And that trickles down to
Yes.
the smaller investors on making decisions. And that's what this is all for. This is just to raise some awareness to people of what's going on in business and what's going on with the trends, but also to look at where opportunities are, because the stuff that we teach, the skills that you and I have, they're transferable. We don't have to be stuck in this little box thinking that this is the only thing that we have available and we've got to now wait 10 years before we get a chance again. We sit around for 10 years, we're going to get eaten up in time. So making sure that we're doing that in a healthy way and making sure that we're doing that while checking all the boxes and not putting ourselves at unnecessary risk. That's what this is
Yeah,
all about. So,
exactly.
Gary, we've gone over a lot today. There's a ton more we could go over, and but we could talk for hours on this business that we love so much. And I just wanted to say thank you very very much for the time that you put in today. Is there anything else that you want to leave our guests with on just any thoughts, opinions, or recommendations?
No, I just want to say, just think before you do anything. Think
Think
twice
before you,
these days.
yeah, yeah, there's lots of time to think, but people don't do enough of it. That's great advice. Think before you act, and
Yeah,
also lean on your professionals. If anybody wants to get a hold of Gary, we'll drop his information in the link, and you can reach out to his brokerage, which again operates out of the Lower Mainland of British Columbia. Very well versed, and I forgot to mention too that you mentioned at the beginning you're also licensed in Alberta. Is that correct?
right, but yes.
Okay, so you can handle everything in Western Canada from Alberta to the coastline. And if anybody wants to get any advice or see where they land in the financing world right now or get some mortgages, feel free to reach out. Gary, thank you very much for coming today. Really appreciate your time. Good luck in your business.
Thank you so much, Keith.